Welcome back to Insured A.F, Accurate and Factual, where we translate health insurance into actual English. I'm McGarity, your tour guide through the maze, and today we're talking about something everyone loves until tax time: health insurance subsidies. We're going to cover what they are, how they work, why they exist, and the exact moments they stop working and leave people panicked. Let's save you some money and maybe a little nasty surprise later. Simply, health insurance subsidies are discounts the government gives you to lower your monthly premium. They're not charity, they're not random, and they're not magic. They're called advanced premium tax credits. Advance because you get the discount now. Tax credit because the IRS checks your income later and adjusts your discount. Think of it like this. The marketplace asks, how much do you think you'll make this year? You give your best estimate. They give you a monthly discount based on that number. At tax time, the IRS compares what you said you thought you'd make with what you actually made. If you're correct, great. If you underestimated, they want their money back. Subsidies exist to keep the marketplace affordable and balanced. If only sick people signed up for health insurance, the premiums would skyrocket. Subsidies help pull more healthy people into the system. More people paying premiums means the whole structure doesn't collapse. It's not about politics, it's about basic math. The government lowering the price so more people buy in makes the risk pool stay stable. Your subsidy amount depends on three things: your income, your household size, and your zip code. That's it. Not your health, not your doctor, not your medical history, not whether Mercury is in retrograde, just those three numbers. You get a monthly discount on your premium, and your insurance company gets the rest of the money directly from the government. Your doctor and your pharmacy never see any of this. This is only how the premium gets paid. But here's the catch. If your income estimate isn't correct, the subsidy isn't correct either. This is where people get burned. Pitfall 1, your income changes and you don't update it. The marketplace doesn't adjust your subsidy automatically. If you make more than you expected to, but you don't tell them in the middle of the year, the IRS asks for the overpayment at tax time. Pitfall 2, you go over the income limit, even by $1. This is called the subsidy cliff. Over the limit means you lose all of the subsidy for all of the year. This is especially important as the temporary expanded subsidies expire at the end of 2025 for 2026. Pitfall 3, you get offered employer coverage. If your employer offers a plan that is technically affordable, even if it's awful, your marketplace subsidy can disappear instantly. Pitfall 4, your income drops too low. If it falls below marketplace eligibility, you may get pushed into Medicaid, which may or may not cover your doctors. These are things that I see every open enrollment. People lowball their income and get a bigger subsidy. Result, surprise, IRS bill. Pitfall 2, people switch jobs and forget to update their marketplace account. They could still owe hundreds or even thousands back. People think subsidies pay the deductibles or the copays. Nope, they only lower your monthly premium. People assume that their child being not claimed as a dependent won't affect their subsidies. It absolutely does. Household size matters. Or people hit the subsidy cliff because of overtime, commissions, or seasonal work, and then they find out in April that they didn't qualify for any subsidies for the year. Do subsidies affect my tax refund? Yes, they're part of your tax return. It can increase or decrease your refund depending on accuracy. Do I have to pay my subsidies back? only if you made more than you told the marketplace or you went over the subsidy cliff. Should I overestimate or underestimate my income? Always overestimate slightly. It's safer and it avoids big IRS bills. Can I get subsidies if my employer offers insurance? Only if the employer plan is truly unaffordable by federal rules. Do subsidies cover my deductible? No. They only reduce your monthly premium, not your medical bills. Subsidies are powerful. They help millions of Americans afford health insurance every year. But they're not perfect. And if you don't understand how they work, they can turn into a nasty surprise at tax time. If you want to check if you're estimating your income correctly, or if you're close to the subsidy cliff, grab my free coverage checklist and my Health Insurance Workbook at McGarrityLLC.com. I'm McGarrity, and this is Insured AF, helping you stay insured by being prepared, not panicked.